Building a royalty company requires long-term vision and an abundance of patience. But when an entrepreneur gets that model right, these become the most exciting businesses in the gold and silver sector. Today, I'm sitting down with the CEO of Metalla Royalty, Brett Heath, who is here to tell us why he believes his company has just hit the tipping point. Welcome to the Jay Martin Show. Let's go.
This is Jay Martin.
All right, here I am with Brett Heath, CEO of Metalla Royalty. Brett, it's good to see you. Last I had you on the show was last summer, almost a year ago.
Yeah, thanks for having me on, Jay.
Well, I'm excited to get an update. So first, I want to maybe get the sort of highlight headlines from your 2024 year, because last we spoke was July of 2024. And, you know, with a company like Metalla, I put pretty much all my focus on the pipeline. What are the deals you've done in the last 2, 3, 5 years? What's looking like it's close to maturing? And there was a lot that was close to maturing in 2024. Some of that's matured now and is producing for you, and there's some more stuff in the near term. So let's begin with just 2024 recap. For anybody who wasn't paying attention, Brett, what are the highlights that we should share today?
Well, the biggest highlight of 2024 is we had one of our more material assets come into production. That is the royalty that we have on Côté-Gosselin. It started production in the second half of 2024. It's now running at a commercial rate. So this will be, for 2025, our largest producing asset. Is a new asset. It's got a 10-year reserve, but will go likely much, much longer. And another focus of 2024 was really the integration post the Nova Royalty merger. There was a lot of integration that kind of went into or was involved in that post that transaction, a really kind of shifting around and putting in place a number of kind of updated controls and processes. We also brought in a new president, Jason Cho, very experienced, came from the operator side, and a new director, Chris Beer. So also on the personnel front, we made a few adjustments, and those adjustments were particularly geared toward kind of how we see the business growing over the next 8 years, and really kind of the skill sets that we think are going to help us drive that growth.
So let's press into Côté-Gosselin a little bit, because this is a new asset in terms of just coming into production mid-2024. But it's big news because it's expected to be the highest producing asset in the portfolio in 2025. You said 10-year reserve. You're right. You know, once a company gets in there, you mine the resource, not the reserve once you're in there. So generally, we could expect a bit of expansion there, but we'll wait and see. Walk me through the deal a little bit, expected production as much as you can get into for 2025 from this new asset.
Côté-Gosselin is a great case study of really our whole portfolio and how we've been able to deliver value for shareholders. And so kind of backing up, as we acquired that asset 4 years ago, and we paid $9 million US for this royalty. And at the time when we bought the royalty, the analysts that cover us kind of come out and say, here's the value kind of we see. And basically they came out and said, look, the royalty's worth about $9 million, what you paid for it. At the time, it was still in development. It was still owned by Eldorado Gold. And but we knew that there was a lot of potential with the asset, and we thought that the asset was eventually going to get picked up and developed. And so over those 4 years, G Mining, who's now the owner and the operator of the asset, acquired that from Eldorado and put it in production on time, on budget. And now it's kind of leading into our largest producing asset. But the interesting part is that the analyst consensus value for Côté-Gosselin today versus 4 years ago, with basically little to no increase in reserves, is now about $24 million. So the analyst consensus NAV of this asset increased a little over 150% in 4 years, with very little increase in reserves. And so that just kind of goes to show like this value curve of these assets, and really kind of what we see is the reduction of the heavier discounts that are applied to development assets as they move into production. Can be very significant, could be very significant windfalls for shareholders. When you look at our portfolio, we that was what we did. Like we went out, we bought very high quality development assets, and we're seeing all those kind of come into production now, as you noted. So for 2025, Tocantinzinho, should kick off according, to G Mining's guidance, probably somewhere to our account around 13 to 1,500 gold equivalent ounces, or call it approximately like around 4 million, upwards of 4.5 million US today, based on spot gold or where gold's trading right now. And remember, that's off of a $9 million investment. So we should see, now that this is cash flowing, probably, around a 2-year payback with another 8+ years of reserves. On top of that, this asset will see one of the largest exploration spends it kind of ever has in 1 year. So G Mining is allocated about 12 million US to drill near resource and exploration, regional exploration around the property. Our royalty covers basically everything on this asset. It wasn't a priority for G Mining to do that exploration, because when they acquired it, it already had 2 million ounces, and they kind of wanted to put it in production as soon as possible. But now, like, we get to kind of see that cash flow, we get to see the growth. We're expecting, we think that there'll be lots of success there by the drill bit.
Yeah. Okay. That makes sense. It's a fine balance that you have to work here, because you're investing in these development assets. 4 years, for you've got the long-term strategy in mind. You know what you want the company to become, and you know how long the strategy is going to take to mature. That's a tough thing sometimes for investors to wrap their mind around, right? And so I like how you position Tocantinzinho as the case study for the business model, because it was 4 years ago you invested in the development asset at a significant discount to today without any increase in the reserve, as you mentioned. $12 million exploration spend this year, so we could make some assumptions about what that reserve might do. But at present, 10-year mine life at 2 million ounces, around 200,000 ounces per year is kind of the math that they're looking at. But they're going to put 12 million more behind the drill bit, right? And probably some. Okay, so how do you? I got to ask you though, Brett. Like, how do you manage that? Because you have to do two things. You got to look for these kind of deals with the long-term time horizon, and you got to manage shareholder expectations at the same time, which are never going to be as patient as you are, founder, CEO, right? Because you've always got the vision and you know what you're doing, but it's a tough dance you have to do, is it not?
Well, it is, and it's not easy. And the thing is that the market's always going to want different things at different times. And as the CEO of a business, I think it's important to constantly think about what the sector looks like, what the landscape looks like, where commodity prices are at in 2 or 3 years. Like, the decisions that we want to make today, the decisions are for 2 or 3 years in the future. And we're using all of the best information that we can kind of put together today to make those decisions and be proactive to this business rather than reactive. I think that there are, in the mining sector specifically, or resource sector specifically, a lot of it is reactive, and that a lot of the decisions are reactive. And I think that's driven by capital and kind of the short-term nature of the capital, I guess, that is really kind of the, call it, majority or main drivers of what you see today. Unfortunately, it's difficult to find those longer term investors and stakeholders. And that's another thing that we've been very kind of careful to manage within our share register, is we want to have big stakeholders that buy in and see that vision, have that duration. Because in the royalty business, ultimately what our strategy has been to identify mispriced optionality. And what that means, what the optionality part of the business means, is that that's all the gold, silver, and copper that we get for free. And when you look in the royalty business, like, that's where most of the value is generated. Like, it's that mispriced optionality. It's the projects like the Côté-Gosselin royalty that we also bought about 4 years ago. and we paid $6 million US, approximately $6 million US for this royalty. And we bought that pre-resource. Fast forward to 2025, about 4 years later, that royalty covers approximately 117,000 gold equivalent ounces to our account. And just kind of roughly modeling that, that's over 200 million post-tax revenue over the life of that asset. That Côté is already in production. Gosselin will be integrated. It's continuing to grow. It's already at 0 to 7.4 million ounces in 4 years. We think it'll go well over 10. So it's that type of value kind of creation. And you do that by having the strategy. Again, like it all goes back to our strategy and our stakeholders and being able to kind of show them like, look, this is how we're generating value. Yes, it is going to take time. I think luckily today versus 2 or 3 years ago, when we were building out our portfolio, the catalysts now are like every other quarter. So as an investor for managing those expectations, it's much easier today than it was 2-3 years ago, because at that time we were still looking to build that foundational portfolio, and we were making those decisions that were strategic decisions to be able to build out that foundation portfolio, because we had an expectation that the market could look like what it does today, which is a very, very difficult time to be out there growing. I mean, when you look at the environment today compared to 3-4 years ago, you've got not only a much, much higher cost of capital relatively for smaller businesses across the sector, but then you've got a $3,000, $3,100 gold price today.
Yeah.
And then what that does in regards to, the expectations on prices and value and so forth, like it all kind of leads into it. So you can kind of see, we had 8 years where we were the most active royalty, public or private company from a transaction perspective, all the way till 2024. We didn't do one deal last year. And it's like we could have done several deals in 2024. But strategically, like we didn't see that it was the right time. We didn't see that those deals would really provide kind of the accretive value and would be able to deliver a higher share price. So, we made the decision last year to say, look, like we've done all this work. We're going to let this play out for a little bit. Obviously, we're constantly looking at new acquisitions and so forth. But it's a lot easier to be a shareholder, I think, today. And I think timing wise, like it's very, very timely.
Yeah, I mean, you're right? That's the story with a company like Metalla. There's a time to hunt and there's a time to harvest, right? And you were very aggressive on the hunt from 2016 for the next 8 years. And you pumped the brakes, and now you've got effectively, pent up supply of production announcements that will roll out over the next 1 to 3 years. Every one of those contributes more gold equivalent ounces to the portfolio. We touched on Tocantinzinho contributing 1,300 to 1,500 GEOs, gold equivalent ounces per year. That's on top of, I think it was around 2,400 in 2024, just to put that in context in terms of the growth that will contribute to the overall portfolio. And next in line is Endeavour Mining, correct? This is the next project that you're excited about. It's near term. Could I get the same bones, Brett? Like, walk me through the deal. What caught your attention, how it's structured, and what you expect to see from this asset?
Yeah, so Endeavour actually was an asset that we bought back in 2017, and this was out of a portfolio that we acquired from Coeur Mining. And at the time that we bought that asset, there was actually just a 2-year reserve. That's what we were buying it for. And we made an investment. We made a reasonable return on that asset, and then it went into care and maintenance. And the beauty of this royalty business is, again, like we knew that asset had an enormous amount of potential optionality based on the geological trend that it sat on. And sure enough, now 5 or 6 years later, an Australian company called Polymetals acquired this asset from the operator, which was a large Japanese company called Toho Zinc. And they've spent the last few years kind of redeveloping the mine plan. Now they've got a 10-year reserve. The exciting part on Endeavour is that this asset is guiding, the operator is guiding for it to start wet commissioning this month, so April. And we're expecting probably the first concentrate sale in June. So we'll probably get a small, albeit probably very small check from Endeavour in Q2, but we should see that significantly increase in Q3 and even more so in Q4. Now, if the company and the operator execute according to the mine plan, this should be our largest producing asset in 2026. So what we'll likely see kind of a base of, as you noted, around 2,500 gold equivalent ounces in 2024 to kind of around 4,000 gold equivalent ounces this year. And that should jump to, call it, around 6,500 gold equivalent ounces in 2027. And again, that's kind of based on, this asset's got, full infrastructure. It's been in production before. They're just restarting it. They're fully capitalized. But the exciting part is that from the very beginning, we always had different assets that were in production. And kind of the main purpose of those assets that we bought that were a bit more short-term oriented was mainly to kind of cover the cost of the business while we built up this portfolio. And you always want to make sure that your costs are covered. It's very important in this industry because it kind of gives you a good baseline to run your business and do it in a manner where, you don't ever have to kind of sacrifice any of the dilution if it's not going right into an asset that is, we feel very accretive and benefit for shareholders on a per share basis. But when we look at kind of where we are at today compared to any point in time over the last 8 years, we're now at a point where we're starting to see all of these longer term kind of core assets start to come online. So Tocantinzinho is a really great example. Endeavour is another really great example that will drive for the first time very, very significant increase in operating cash flow, EBITDA growth that will compound every single year through the end of this decade. And so Endeavour is going to play a meaningful role in that in 2025 and 2026. And, behind that, we think, end of 26, kind of early 27, Côté will be kind of right there to continue that upward phase in gold equivalent production.
Right. I mean, it's a positive outlook, Brett, to have the largest producing asset in the portfolio coming online in 2025 with the expectation that the next asset to come online will then become the largest performing asset. Presently at 7 producing assets in the portfolio. Is that right?
Oh, we'll have 7 when Endeavour turns on. So basically, yeah. I mean, the company hasn't officially announced that they have started production, but they have been guiding publicly to the market that April is the month.
So walk me through the dynamic at the Côté-Gosselin project. Some shareholders might be familiar if they've been with the story for a while, but it's a bit of a moving target, right? There's more to come in terms of integrating Gosselin, and so walk me through the mechanics of this one, Brett. Yeah.
So first off, from the inception of this business, we have been looking for our Côté and Gosselin. And what that means is that in every royalty company, all the major royalty companies today, that there typically is like one core asset that really kind of rises above the rest. It raises the value of the rest of the assets in the portfolio, and it becomes kind of the cornerstone piece of the portfolio. We think that the royalty on Côté and Gosselin has that potential. As I noted earlier, it's gone from 0 to 7.4 million ounces. This was updated about a year and a half ago. Since then, IAMGOLD has already drilled an additional 35,000 meters. That was not included in the update or there was no update in 2024. IAMGOLD is drilling another 45,000 meters in 2025. So we think that there's probably like a fairly good chance that in the next update post 2025, as they come out with the integration, Côté's got probably, something north of 10 million ounces there. So very, very significant asset. But what's exciting about Côté and Gosselin is that we think it has potential to become a Canadian Malartic or a detour type asset. These are kind of very, very core type of assets that to their big operators, which Agnico Eagle owns both of those assets. But they're the types of assets that continue to grow and continue to give and really provide that optionality. Côté and Gosselin are, when they started, they were about 1.5 kilometers apart from each other. When you look at kind of how they have both grown, the pits are already overlapping. So we see this as ultimately one large, very, very significant asset. And we think as that integration occurs, our royalty ground, which covers all of Gosselin and a part of Côté, will be one of, or if not the most meaningful royalty that is covering that mine.
Yeah, and the Malartic mine carries Osisko Gold royalties, right? That's their anchor points. And so timeline. What's the Is this a 2026 development? Is that the expectation? Anything can happen, anything can change. But at present, Brett, is that what we're looking at?
Yeah. So right now, obviously, IAMGOLD is continuing to do a number of different studies. They're still ramping up Côté right now. So that should, the Côté should be ramped up to kind of what their expectation is by 2026. The sequencing of the Côté mine plan is starting at the south, going to the north. So our royalty on Côté itself covers about 6 to 10% of the reserves on the north side of the pit. And as they sequence to the north, then that will come into production. So our estimate is somewhere in kind of towards the end of 26, like early 27. Our expectation is that they will start mining from the north. Now, again, this is our expectation, not the operators, but based on the amount of drilling that IAMGOLD is doing or planning on doing in 2025, our expectation is by kind of the second half of 2026, they will have kind of everything that they need to be able to integrate Gosselin. And that'll kind of map out what that kind of looks like, what the plan is, and so forth. And that will make all of those ounces very, very real to the market. And so kind of what we saw with Tocantinzinho is kind of where we're at with Gosselin. Gosselin's the big bulk part of the value of this royalty. And as Côté comes on, as Gosselin gets integrated, all of those ounces start to fall into the mine plan. The discounts that are applied, the heavy discounts that are currently being applied to assets like Côté and Gosselin and Endeavour and many others will decrease, and then we'll start to see that cash flow come in. So it's an exciting piece of our business, right? It's an exciting piece of our business. We think that that asset continues to grow, and there could be much more behind it. I mean, when you look at kind of Malartic as a case study, this is a mine that's been one of the largest producing mines in Canada for, coming up, a little over a decade now. 5 years ago, the underground reserve at Malartic was 0. And today we're sitting at like 17 million ounces. And you've got Agnico Eagle publicly stating that they believe they can get Malartic to 1 million ounce a year operation. So it's these types of operations that you see are like, okay, they haven't even scraped the surface on kind of the potential underground components to this asset. You've got a potential super pit that's probably north of 20 million ounces potential in mineable ounces and reserves. And, currently it's not far from there already. So, so it's exciting to see kind of the integration of that and kind of what that'll mean to our portfolio and the overall value of our business.
Yeah. 100%. It's interesting to watch the business evolve, Brett, just given how you kind of almost like shift philosophies, right? From the 8 years of aggressive hunting, deal making, expectation this will pay off down the road once the pipeline's full. And now you've hit the brakes on that. You're still looking at things as you mentioned, but it's time to let these assets mature and come online. And in terms of, we ran through the 2024 year, but what investors should look for. I mean, everybody wants to know when they watch interviews like this, okay, but what's next, right? That's always okay, but what's next? What's next is we can watch the production numbers come out of Tocantinho, see if this asset does become the top performing asset in the portfolio in 2025. Endeavor Mining right around the corner this month. It's April 9th today. So that's maybe a bit of a drip into Q2 numbers, but let's look for those Q2 and then let's look for those Q3 and see how that begins to mature. You showed me a chart. It's from your deck. If you just walk me through that, I'm going to pop it up on the screen here so people can take a look at it as you're walking us through. But maybe I like the context and the way this presents. So just take a minute, Brett, and walk us through that.
Yeah. So what you see here in this chart is, in summary, you've got about a 35% CAGR in gold equivalent production through the end of this decade. And so that starts out with in 25 with Tocantinho and Endeavor. Then you go into kind of a full year of Endeavor, potentially La Paria in 2026. Côté will be that major driver in 2027. So a nice kind of, call it low risk, quantifiable growth stair step that takes you from, somewhere probably around 12 US top line this year. To something kind of probably around 24 US top line in 2027. But the exciting part is kind of what is beyond that. So that's some great stair step growth. Again, that's a pivotal point in the company's history where, I believe we are going to see significant EBITDA growth, operating cash flow growth from here on out through the end of this decade. But as you get into the end of this decade, you've got a whole list of, call it our tier one assets that we think have a pretty reasonable to high probability of coming online. So the assets that I'm talking about here are Copper World, who just got their final permit. Actually, the Trump decision, I think, reversed the decision on the Rosemont piece of it. So now basically you've got a 44-year reserve on this asset. We believe, again, our opinion, we believe that they'll likely Hubei will likely seek a joint venture partner at some point this year, complete the definitive feasibility study, and probably get to a construction decision in the second half of 26. That would line that asset up for production in 2029. Okay. We've got the extension of Fosterville to the south. They continue to develop along strike and at depth. On the main Phoenix decline on that asset, also on Harrier. Both are getting much closer to our royalty property line. We have a 2.5% GVR on that asset, so no deductions, 2.5%. As those assets kind of come onto our royalty ground, that'll be a very, very significant bump in operating cash flow. Again, we don't have an exact timeline for this, so we kind of put it in this 28 to 30, but they are getting a lot closer. Castle Mountain, we have a 5% royalty over a little over 2 million ounces of the approximately around 7 at this asset. This is still today, even post Equinox and Calibre merger, their biggest growth asset. So we're expecting Castle Mountain to receive their final permits in mid 2026. Which would line them up for kind of a 2028. Again, this is an asset that was previously in production, but very, very significant potential gold equivalent growth, particularly if the mine plan, when it's updated, which we think there's a high probability that they mine from our section first because it's higher grade, makes more sense, and that could be a very, very significant kind of jump in production that's not even in our models or the analyst models today. We've got Taka Taka, which is one of the largest development projects in copper and gold in the world. First Quantum owns this asset. It's in Argentina. Our expectation is that they're going to apply under the RIGI system, which is basically an application system for foreign investment to lock in certain taxes and other commercial aspects of being able to deploy significant amounts of capital and develop these assets in Argentina. So we think that also will move along. And then Wasamac. Wasamac is going to make up a meaningful part of the open pit feed for Malartic as they transition underground. And then again, Gosselin is what we talked about. So I don't know, when we look at this, like I think conservatively you can say it's around 15,000 gold equivalent ounces, like up to 30. I don't know if it's going to be that high. But we're going to have a business at today's gold price that should kick off somewhere between 50 and 75 US top line for as far as you can see. The average reserve life of our top 10 assets is 20 years. So when you look at it from that perspective, again, all this is bought and paid for. And then you look at our market cap today, sitting, roughly around kind of 260 million US. It is an incredible opportunity to position kind of ahead of this growth, ahead of all of the optionality that's embedded in this portfolio. And again, that has been our strategy from day one, to be able to capture that. And you're completely right. And I think that there's very few investors today in this market that really kind of have that duration. But we're seeing it. We're seeing a very, very significant increase in institutional ownership with our shareholder register. In fact, we turned over about 10% of the shareholder register to institutions in 2024.
Yeah.
I wouldn't be surprised if it's something similar in 2025. So look, there are people that are paying attention, and there are people that are going in and positioning for kind of what we just went through.
I love that. And I'm not surprised about the turnover to institutions, given, again, now just the near-term catalysts that are sort of pent up right now and releasing with consistency. So lots of news to come. Brett, we got to sit down again, probably in like a quarter again, to get a recap on these developments. So I'd love to get you back on the show, man, but I appreciate your time. Thanks for coming on today. And it's always great chatting with you.
Yep. Thanks for having me, Jay.